Hey guys, welcome to this lesson on business finance. This particular lesson is going to cover the basics of what you need to know so that you can stay in touch with your finances for your business. It's really important that you get this stuff straight from the beginning because as time goes on, you'll be getting a lot of orders and a lot of expenses and stuff like that. You need to keep track of everything. And I've created a really great spreadsheet that I'll show you later in this module of how to do that. But first and foremost, just to understand the basics of a business, especially a dropshipping business, and the finances behind it. So the first things first, you obviously want to keep track of is the income from all the sales. So that's basically the total sales amount that you have through your store. Now, this is the total of your sales minus your discounts. Okay, that's the first thing. The next thing is your cost of goods sold. You need to keep track of your cost of goods sold, which is all of the supplier invoices that you get sent. And best practices is to actually save all of your supplier invoices in some sort of a cloud folder, like a Google Drive folder, and also link to those from your spreadsheet as you're keeping track of these orders. The next thing is your gross profit. So your gross profit can be a simple calculation, but you really need to understand that it's as simple as your income minus your cost of goods sold on any particular order, any particular period you want to calculate that for, over a week, over a month, that kind of thing. So keeping track of your gross profit per week or per month, per quarter, and per year obviously is really important because that will help you to build a budget so that you can do future growth for your business. You don't really want to spend over your budget unless you have money to invest in your business. The cool thing about having a US-based business, filing your taxes, is that you are able to write off business losses in the first couple of years of your business. So consider that, like if you want to put $1,000 or $5,000 into your business so you can launch faster, get going faster, build it faster, that's perfectly fine. You can actually write off any losses that you have, any upfront investment that you have there. But definitely speak to a CPA accountant about that. All right, next thing you want to keep track of is your expenses. So anything related directly to your dropshipping business, and then expenses that are not really related, but expenses that you could write off to your taxes come tax time. Okay, and the reason why is because expenses directly related to your business are going to have an impact on the multiple that your business will be worth in the future. So once you have your business for about a year or so, you can look at selling it, and the multiple will be determined by the expenses directly related to it. Any expenses that were not directly related to your business, but that you have in your sheet, you should keep a separate list of those. And I'll show you in this bookkeeping sheet how to do that. Your net profit is the next thing to consider. So it's your income less your cost of goods sold less your expenses. So your net profit, obviously, for your multiple worksheet will be the directly related expenses, and your net profit for the taxes will be directly related expenses plus other related expenses. And then you should take a look at and consider your average monthly revenue so that you can set growth figures and growth goals. And then your average monthly gross profit. Okay, that's really important so you can try to enhance your profit somehow. And your average monthly net profit so you can try to look at cutting expenses and or try to figure that out and make the most of the expenses you already have. All right, guys, so that's pretty much it in a nutshell. That's really what you need to know, but the most important thing is that you need to know with dropshipping, obviously, is that you're not buying inventory ahead of time. It's the most confusing part, is that with dropshipping, instead of buying like a pallet of whatever it is, holding onto it for a month and then selling it, you are simply buying the one piece of inventory you need right as you sell it. So you sell that product first, and then you go to your supplier and you buy it. So keeping track of inventory, you're never going to have any inventory at the beginning of the year, and you're never going to have any inventory at the end of the year. Okay, you just buy it and sell it immediately. So when it comes to bookkeeping and stuff like that, just understand that your cost of goods sold is directly related to your sales. Okay, and as simple as that. So with that said, let's get into the next lesson, and I'll see you there. All right, guys, welcome to this lesson on what you need to know about accounting and filing taxes before you get started. So with the dropshipping business, it's a small business, okay? And most of the time, we're going to be self-employed entrepreneurs. You're going to be using, if you follow my business formation advice and guidance, you'll be forming an LLC in your state, and you'll be filing taxes as LLC taxes as sole proprietorship or LLC taxes as an S corp. It really depends on your asset protection needs. So if you do have a lot of assets, then you need to speak to an accountant for the best formation structure for you to protect those assets from potential liability from this online business. But if you don't have any assets to protect, you're just starting with barely anything, maybe a little bit of cash, then you really don't need that asset protection. It's going to cost more money in the long run anyways, so you can just start really simply as a sole proprietorship, okay? And so that's basically the starting off, is that understanding that a sole proprietorship and even a partnership business structure has pass-through taxation, okay? So any profits you make for your business are directly passed through to your personal tax return. So you're going to be filing a Schedule C, and on your 1040, you're going to be reporting your income as your personal income. That's pretty much it. As a single member LLC, you can choose to be taxed as a sole proprietorship, as a partnership, or as an S Corp or as a C Corp. So if you don't understand what this all is, you need to speak to an accountant about it, okay? Just understand that as filing your taxes in the U.S., you're going to be filing as single, head of household, or married filing jointly. There's definitely different, tax breaks and different taxes amounts to be owed for different filing statuses. So make sure you get the right one for you. And this is all related, of course, to your income tax. Self-employment tax is separate. Self-employment tax is a tax based on businesses that don't pay their taxes ahead of time. The IRS likes to be paid throughout the year, usually quarterly. So once you report taxes for the first time as a self-employed entrepreneur, they're going to give you estimated taxes to report every year, every quarter. And so throughout the year, if you don't report those estimated self-employment taxes, then they will hit you with interest and a fee and stuff like that. It can equal to quite a bit of money if you're not careful. So you need to be careful. Do what they say to do. It's really easy just to file your estimated taxes, and at the end of the year when you go to file, then you won't have to pay any fees. All right, state income tax is separate than federal income tax, depending on the state you live in. So if you live in, let's say, California, you're not just going to be able to start an LLC in Wyoming and avoid California income tax. Okay, so as a resident in California, you're going to have to be required to report that income no matter what. Now, if you do live in a state that's income tax free, like Washington or Texas or Nevada or Wyoming or Alaska, any of the other ones that are income tax-free, Florida I think is another one, then yes, you will be able to take advantage of that, and you won't have to pay income taxes on your business. So that's really cool. Writing off your personal expenses to your business, is it ethical or not? This is a question I get a lot, and it's really important to understand. So yes, first of all, this is your business. This is an online business, and the cool thing about online business is that you are able to write off expenses that are related to that. And if you have the lifestyle of traveling around or working from coffee shops, things like that, anything that could possibly be related to your business, you could potentially write off. So it's not that big of a deal. Just make sure you keep track of all your receipts. You can take pictures of them and upload them online, just really simply that way. Keep track of them by date. Or, you could not and just hope that the IRS never audits you. But if they do audit you and they don't have receipts, it's potential that they might say that you can't write those deductions off. You might have to owe more taxes. So just be careful. And generally speaking, small businesses, the IRS is not going to waste their time and effort to go out and audit small businesses. They want to make more taxes from people that are worth going out and auditing. Okay, so don't worry too much about it. And yes, I would definitely write off anything related to your online business that you think is related, and talk to a CPA if you have any questions about that. Okay, it's just my advice. And also, by the way, if you do want to consider traveling around the world, there's kind of a digital nomad tax hack that you can figure out, that I figured out. So if you live in a state with income tax, for instance, and you're thinking about moving out, traveling the world, before you do that, try to establish residence in a state that has no income tax. So it's pretty easy in places like Texas or Florida. They have a lot of retirees. So a lot of places will offer you like a virtual office, virtual mailbox kind of a service along with a lease agreement. And you can take that to the state and you can apply for a driver's license and register to vote. As soon as you get the driver's license and register to vote, you're technically a state, you're a resident of the state, and you are going to pay income tax then in that state, which there is none, so that's good. And of course, if you file your LLC in Wyoming, which is what I recommend, Wyoming has no income tax as well, so you'll be set. You'll be fine. So that's one of the great ways to do it. Another thing is that when you go to travel the world and stuff like that, and you start spending 11 out of the 12 months out of the country, you can qualify for a tax break that makes it so the first $100,000 of income that you make is tax-free. Now, that does not apply to self-employment tax. It just applies to federal income tax. But if you make quite a bit of money, then you can avoid that just by staying out of the country for 11 out of 12 months. And if you're interested, of course, talk to a CPA about that. Okay. And as far as filing your taxes goes, use TurboTax to self-file. And it's really easy, only costs a little bit of money. Now, if you have a lot going on or you already use a CPA, I recommend using a CPA. CPAs are great, especially if you have a partnership or you have a more complicated business structure or you just have multiple things going on, like you're a real estate agent or something like that. It's really good to use a CPA. They'll make sure you do your taxes right, because if you make a mistake on your taxes, the IRS sends you a letter, then it's a big kind of a problem and you have to deal with that. It's a lot of stress. So avoid that by hiring a CPA, or make sure you're doing it right and file your taxes with TurboTax the right way. Okay. All right, guys, that's this video. In the next video, I'm going to show you my income statement spreadsheet and how to use it. So see you there. Okay, so I have updated the bookkeeping sheet, and I want to show you guys what I did. This is a brand new version of it, and this is how it works. So first you have the summary tab, and this will show you the sales at the top, each month across the top, total and averages on the right side. Cost of goods sold, and then you have gross profit and your gross profit margin. Here you have your expenses. So your expenses are totaled right here, and then for each month, and they're totaled at the bottom. Adds total, software expenses total, and total expenses. Then you can put your credit card rewards here. It'll automatically fill with 2%, so whatever it happens to be, you can kind of just estimate it. Net profit, and then which is cost of goods sold, or gross profit minus expenses, and then net profit plus credit card rewards, and then net profit margin. So net profit margin I'm calculating by adding credit card rewards. If you don't want to do that, you can set it up yourself to do that, change it. Spreadsheets are formulated with these really simple things. Equals sum of means you're adding up the sum of two different cells in two different places. So this is January F2. January F2, so that's the total there, and that totals up the entire thing here. So it's just a program that totals things up. It's pretty simple. So your sales will be entered into each month's tab, and your order number goes here, date, taxes, total, merchant fee, payout amount, which is automated, vendor name, invoice total, shipping fee. Sometimes vendors charge separately for shipping, so I added a new column for that. So invoice total, shipping fee, and free gifts total will equal your total cost. So the idea here is that you'll be able to reconcile your checking account using this bookkeeping sheet. You can enter everything here, and you should have the amount that lands in your checking account here. Sometimes Shopify combines multiple orders into one. You'll be able to see that in your payouts, which orders are on which payouts, and then you'll just know that each payout came here. And I'll kind of show you guys later like a process for reconciling your bank account with your bookkeeping sheet, so that you can kind of keep your finances in order. One thing that can happen is you get a lot of chargebacks and refunds. You got to really track down all that stuff and make sure your suppliers are refunding you, or else you can get kind of caught up losing a lot of money. So it's really important you keep on top of your finances. So just make sure you do that. I have an invoice link spot here, and credit card used last 4, free gift invoice, credit card used. You will also want to upload these to your Google Drive folder, obviously, so you can get a link, and that's that. So each month goes there. So when you order, I'm going to show you an example from my website here. So this is an example of an order that has not been captured yet. And so basically, show you where to find everything. Order number is up here at the top. Date is just below it here. Taxes, you'll see that down here in this area if they paid taxes. Total, which is all the way down here at the bottom. Merchant fee will only happen after the payment's been captured, so I'll show you what that looks like. So once payment's been captured, you can scroll down here and see a little thing that shows the amount was added to your payout. You can go to your payout. whatever that particular order number was, 10,559. You can go to that particular reference of that order number, and on the right side it'll show you the fee related to it. Okay, that's your fee right there. Okay, and then that'll total up a column here. You can put the vendor name, which is pretty obvious how to find that. Invoice, you'll get that from your supplier. Shipping fee, if they charge shipping and it's on the invoice itself and it's within the invoice total and they charge all one, then you can probably just put it under invoice total. It'll be easier that way because you really want to just use this for tracking down charges to your credit card. So this is just like how it's charged to your card. If it's all charged under one, then I would do that here. If it's charged separately to your card, some vendors do that, then having a separate column is really useful here for tracking down those credit card charges. Okay, and then free gifts total. So when you go to reconcile your bank account, you're going to want to be looking at your checking account, making sure all the payouts are in line with what Shopify is supposed to be paying you out. If there's some discrepancy, you can contact them about it, obviously. Usually they'll be taking chargebacks out of your payouts. So if there's a discrepancy, I would check that first, and they'll be taking refunds out of your payouts as well. So you definitely want to check those and cross-reference those. So for here, you'd be able to check a credit card for all the invoice total charges and shipping fee total charges. Just make sure they line up. And then, you can create some kind of a system where you start, highlighting rows like green if they're good to go, if everything checks out, that kind of thing. It's up to you. So you really just want to sort of create some sort of a system on your own for that. I just put the blue here because these are automated columns. You don't need to adjust the numbers in those, so you can know which ones are automated, which ones aren't. Chargebacks and refunds have the exact same thing as everything else, except there's one added here called credit memo link. I should put that on refunds too, though. If the supplier issues a credit memo, then you'll want that link here. Chargebacks, the deal is when you get a chargeback, you just want to copy and paste the row here, and then you want to kind of go over that chargeback between the supplier and customer as much as possible until it's resolved. And when it's resolved, you can just delete the row from the chargebacks column. You leave it in the thing, but once it's resolved, if you want it, then you can remove it from here. If you lost it, I would leave it in here and actually remove it from the month which you entered it. And then you got to deal with the cost of goods sold at that point. So you want to get rid of that, obviously, so you don't lose any money. When you lose your chargeback, the total here is going to be a negative amount. It's not going to show negative, but you're going to think of it as negative. And you want this to be not showing any numbers in it. So if it shows numbers here still, then you want to get to your supplier and try to get that refund somehow. And that's a good way to follow up on stuff like that. Refunds, whenever you have a refund, you can just put the row from the order of the month into here, and then you'll be able to follow up with the supplier to make sure your cost of goods sold gets refunded as well. Okay. That's just what you need to do. This isn't perfect. It's just one way you can do it. I would recommend hiring an accountant like Bench or your local accountant, whatever, somebody who deals with e-commerce. That way that they can actually help you to do your books and keep it complete. And then also by doing your monthly books, you'll be able to have them do your taxes really easily as well. So this is a really good way to kind of keep track of it internally. And what I would do after you start scaling is hire a internal accountant, someone who can actually keep track of your stuff for you internally, keep track of your orders, keep track of your chargebacks, keep track of your refunds, and follow up with that every single day. When volume starts to get a lot bigger, you'll definitely need an internal accounting department to deal with all this stuff. All right, well, I hope that makes sense, guys. If you have any questions about this, just let me know. Thanks.